Hello, everybody. Welcome to Inventory Part 7. We're going to be talking about sales discounts, sales returns, and sales allowances. So when we have, unlike purchase discounts, purchase returns, and purchase allowances, where we directly credited the inventory account, we are not going to do that here. Once we record revenue, we do not touch it. We leave it alone. Rather, if we have a sales return, an allowance, or a discount, meaning that my revenue is going to be reduced, we're going to use something called contra revenue accounts. Now, what are the differences? Sales returns, I'm physically getting the goods back. Sales allowances, I'm telling the customer they can keep the goods, but I'm going to take an amount off of their invoice. Sales discount, the customer pays me within their payment terms, and if they're going to basically receive a discount. Now, the important thing to remember is that when it comes to these items, the journal entries are going to be exactly the same. I recommend going through and memorizing them, entirely up to you, but let's go through and check it out. So right over here, we're building off our prior example. We've recorded the sale. Now, on 1/5/22, LGA returned 10 bags. Now, once something is returned, what we're going to be going through and doing or using is something we call a contra revenue account. Because it is a contra revenue account, it is going to have a debit balance, and this is going to be for a sales return. So right over here, if LGA gave us back 10 bags, I'm going to go through and record a sales return. Let's go figure this out. So they returned 10 bags. Now, if I sold it to them for $52 each, the amount of the sales return is going to be 10 bags. My cost or my sales price per bag was 52. Okay. So the amount of the sales return is going to be 520. I'm going to debit sales return. Now, once the customer gives me back this item, they're not going to turn around and want to give me the full amount that they owe me. So I'm going to credit accounts receivable. I'm going to credit accounts receivable for 520. Now, the other part of this is when I'm getting a sales return, the inventory is coming back to me. So I have to show the inventory coming back onto my books. To go through and to do this, the bags that were being returned were 10. My cost per bag is going to be at 21. These were the numbers I gave to you earlier on. If you want to see how the sale occurred, please look at the prior video. Right over here, this was at $21 each. So right over here, the amount of the inventory return that's based my sales return is going to be at 210. So what I'm going to do over here is I'm going to credit cost of goods sold over here for 210, and I'm going to debit inventory. Now, this inventory is going to be a little bit different because it's going to be a returned inventory, right? So I may not be able to put it directly in. I might call it something else, but for our purposes here in terms of learning, this is how we're going to do it. So if I come over here and I'm going to look at over here on 1/5/22, what do I do to record the sales return? I'm going to debit sales returns. I'm going to credit accounts receivable. I'm going to debit inventory, and I'm going to credit cost of goods sold. So over here, my sales return was 520. My accounts receivable was 520. My inventory was 210. And then my cost of goods sold was 210 to record a sales return. Now, next one over here. On January 7th, I gave them a $200 purchase allowance. And this is what we really want to call this is a sales allowance. I'm giving them a $200 sales allowance. And if I could spell that correctly, it would be a great day. Okay, so I'm giving them a sales allowance. That means I'm not getting inventory back. What I'm going to do instead is I'm going to record this as a sales allowance. Okay, this is just like it's kind of like the sales return, but in this case over here, I am not getting the inventory back. So how do I record it? I'm going to debit sales allowances over here for 200. And I'm going to credit accounts receivable for 200. Notice I'm not doing anything with the inventory because with a sales allowance, they're keeping the inventory. I'm just telling them they don't have to pay as much. So right over here on 1/7/22, I'm going to debit sales allowances and I'm going to credit accounts receivable. So right over here, this is to record a sales allowance. Again, same format every single time. Now, last one over here is that on January 8th, they're paying any remaining balance that was due. Now, if they're paying within the payment terms, what's going to happen? Well, it was sold on January 1st. They're paying me on January 8th. When you see 210, they're going to get a 2% discount if they pay within 10 days. Full amount is due in 30 days. Because they're paying that quickly, what I'm going to do over here is I'm going to say, okay, how much do they owe me? Well, the customer owes me right over here. They owe me $20,080. So the amount owed is $20,080. My purchase, the discount I'm offering is going to be at 2%. So the discount amount is going to be $20,080 times 2%, or it's going to be $401.60. Once I know this amount, how much cash am I going to get from the customer? Well, the amount of cash I'm going to be receiving is going to be my amount owed less the discount amount, or 401.60. So the amount of money I'm going to be receiving is going to be $19,678. So let's go through and have some fun and record this one over here. So I'm receiving cash, right? Cash is an asset. I'm going to show that cash coming in with a debit. So I'm going to debit cash right over here for $19,678.40. Now, at the same time, right, once the customer pays within the terms, are they going to owe me anything? The answer is no, because I'm offering them a discount. So my accounts receivable, if I used this amount over here, I would have a problem because this would then show an amount of 401.60 or 402 in this case. So what I have to do here, though, is I have to credit this for the full amount, or $20,080. So this is going to go down to 0. So let's take a look at our journal entry. On 1/8/22, I'm debiting cash. I'm debiting cash right over here for $19,678.40. Remember, I offered my client a discount. I'm crediting accounts receivable for the full dollar amount. Remember, they're paying the amount within the discount period, so they're not going to owe me anything after that amount is paid. What do I need to do to balance? Well, the amount that I'm going to need to balance is going to be the amount of my discount. My discount amount is 401.60. So for this one here, I'm going to use another Contra revenue account. Remember, Contra revenue. Revenues are generally recorded with a credit. We call it a contra revenue because it has a debit balance. So right over here, this is going to be sales discounts for 401.60. And this is over here to record receipt of payment. So again, I realize that this video is running a little bit longer than the way I'd like to have them go, but hopefully this is helpful. I want to thank you for joining me here today. If you have any questions, please feel free to ask them below. Really appreciate your liking and subscribing to these videos, and I look forward to seeing you on the next video. Have a great day.